Day 32 of my journey to a $500,000 stock market portfolio. So as you can see, my equity in my margin, you can see it moving because we're real time. I'm recording this video 9:34 Monday, October 21st, sorry. Pre-market, my equity was at 7,200 and now you can see it dropped to 6,200. There's a lot of movement. 6,271. All right, so today should be a fun day because I've got a lot of call options that expired on my covered call trades. So that means I'm gonna get to sell some call options today. So for example, Dell, I've got 100 shares at 52.81, but it's naked. There's no call option sold against it like I normally do. So I'm gonna go ahead and see what I can get for Dell if I sell a call option at a 52.5 strike, November 15 expiry. So I could get something between 70 and 90. So not so great. I usually get over $1, but usually Dell is trading over 50. Right now it's at 49.92. So let's just put an order at 90 or even 85. Right now the bid is 70, the ask is 90. So I'm gonna put something at 85. Oops, sorry, not buy. Oh, that was gonna be a big mistake. I want to sell. So I want to sell at 85. One contract because I only have 100 shares. Sell short one Dell November 15, 52.5, $85 or 85 cents. In my margin account, yes. Send order. Here it is. Let's see if I adjust it. Let's bring it to 80. Actually, I'll leave it because I think Dell is going to go above 50 today. So I'll leave it as it is at 85. I've got United States Steel as well. That's naked right now. I could sell some call options against it. Now my average cost is 18.29, but the stock has been dropping ever since. But I'm still collecting something out of it because I'm selling call options at a 13 strike. So I'm collecting some premiums out of it. United States Steel looks like it's at 11 right now. So let's see what is the furthest strike I can choose with decent premiums. So I've got 400 shares. So I'm going to sell 4 contracts. So let's go to November 15. So at 13, I can get 15 cents. Let's see if I can go further. At 14, I can get 6 cents. 6 times 4 is 24 minus $8 of commissions. Yeah, so maybe 13.50. 9 times 4, 36 minus 8. Yeah, $28. 11. So right now it's at 11. Do I think that by November 15, United States Steel will reach 13 or 13.50? Kind of tempted to go at 13. But the further I go, the safer I am. Because I don't want to lose my shares at 13 because my cost is 18. So I'd be losing $5 a share instead of just making 15 cents or 23 cents. So I'm going to go for the 13.50 expiration. I'm going to go for the $13 expiration because I'm a little greedy. I don't think United States Steel is going to move up 2 points or almost 20% in 4 weeks. Unless it has earnings. Let's see if it has earnings. Earnings is October 31st. Okay, play it safe. Let's go with 13.50 or even 14. I can get 7 times 4 is 28 minus 8. I can get $20. I'm going to go with 13. All right, so 13, 4 contracts. 17 cents. Looks like it's still going up. Maybe I'll do 18 cents. Sell. So $72, $8 of commissions, 18 cents. Sell for November 15, 13 strike. All right, send order. So let's look at Dell. Where is it? Okay, I'm gonna bring it down to 80 just to get something confirmed. Dell might drop. I don't know. It looks like it's gonna go up, but it could also drop. And if it drops, I'll regret it. So let's just get something instead of nothing. So if I drop it to 80, it doesn't even go through. United States Steel between 16 and 17, nothing yet. I'll bring it down to 17. All right, let's go back. So Dell, I've got an order. Oh, I've got SNC as well. Okay. So SNC, November 15. My strike on SNC should be 22. I bought it at 21.75, but I collected $1.50 already from SNC. So my true cost is about 20 point something, right? Now I can go for a 22 strike. I'll collect about $20. So that's not much. If I go for a 21 strike, I'll collect $25. And I think that's what I'll go for because I don't think SNC is going to go above 21. And even if it does go above 21, I'm going to lose my shares at 21. So I'm going to lose 75 cents because I bought it at 21.75. but I already collected $1.50 plus another 25 right now. And anyways, I'd rather have my money back and use it towards something else. But I don't think it's going to go above 21 come November 15. So I'm just going to sell at 25 or at a 21 strike. Although the difference of $5 is not worth losing 75 cents. If it was a bigger difference, I'd go for a 21 strike. So you know what? I think I'm going to stick to a 22 strike. And then I'm going to put it at 20, sell. So sell SNC.TO, November 15, 22 strike for $20, send order. Okay, so now none of them have gone through yet. Is there anything else on my margin account in terms of covered calls? No. All right, let's go to my TFSA. I've got Afria. My cost is 11.73. The stock is trading at 6. So that's the biggest downside with covered calls is if you pick the wrong stock and if you buy it at the wrong price, you end up with this position. A stock that you bought at 11, but the stock right now is trading at 6. You don't know which strike to choose in order to sell call options against. I don't like leaving my capital not doing anything for me. If I don't do anything, it's like I'm waiting for Afria to go above 11 for me to make a capital gain. So my income or my profit from this is going to be only capital gain, which is not in my control because I have to wait. But when you sell premiums, it's more in your control because you could do that every month. So right now I want to generate income from this capital that I invested in Afria. So the only way to do it right now is to sell call options. So, but now I have to choose the right strike price so that I don't lose my shares at a lower price than what I bought it at. So this is a Canadian Afria.to. I've got 200 shares, so 2 contracts I'm going to try to sell. So let's go until November 15. So at $10 strike, I get 2 cents maybe. $9, I get 3. So the only thing here that makes sense is $7. $8 barely gets me 7. So let's see if I go further out. Let's say I go to December. $8 gets me $20, 20 cents. I think I'm going to go with $8 for November 15. I think it's safe. I don't think Afria is going to jump from $6 to $8 in 4 weeks. With the 6, so let's go for 9 cents. 2 contracts. Sell. If it goes through, it goes through. If not, I'll change my strike. So 2 contracts at 9 cents. That's $18 minus fees of $6.45. Send order. What else do I have? I have CHK that I bought at 2.8. Right now it's trading at 1.27. So I'll either pick a strike of 1.5 or 2. So let's see what I can get with CHK. I've got 1,100 shares. So I'm going to sell 11 contracts. CHK calls November 15. So I go with November 15 because they're the monthly expirations. They usually have more volume, better price. All right, so November 15, CHK, $1.50 gets me 7 cents. $2 gets me 2 cents. 2 times 11 is 22. Minus commissions, I'd be left with $10. Even less, actually. So I guess I'll have to go with $1.50 if I want to get something out of this. Does it have earnings? It has earnings November 1st, estimated. Could be a little dangerous. I'll come back to it. FCX has earnings October 23rd, so this week. Right now it's trading at 10. My cost is 11.4. So I could either take a strike of 11 or 11.5. I've got 200 shares, so 2 contracts. FCX. All right, calls. All right, so this is October 25th. Nope. I want November 15. So 11.5. Actually, let's see what October 25th gets me. Yeah, not enough. Okay. So November 15, if I take an 11.5 strike, I can get about $16 minus commissions. Not bad, actually. If I go for 11, I can get 16 cents. Yeah, I'm going to go for 11. So 2 contracts at 16. So this one's going to get filled right away. 10, 11. Yeah, I'm okay with this. So 2 times 16, 32 minus commissions at 11 strike. Yeah, let's go. Send order. See, this one got filled right away. So now my FCX has a call option against it. So now it's a covered call trade. GrubHub. All right, GrubHub went up already 2 points today. So yeah, that's why it's important to choose the right strike that doesn't cost you. I know GrubHub has earnings. All right, so I've got 100 shares and my cost is about 70. the strike that I'm willing to let GrubHub go at is 70. So let's see what I can get. I hope I can choose 70. November 15. See, it's got earnings October 29th. All right, gotta choose more strikes. So at 70, I can get about $50, 55 cents. 65, I can get a bit more, of course. But then I'm worried that it goes over 65. Yeah, I'm gonna have to play it safe and go with 55. So I'm picking a 70 strike, November 15, collecting 55 cents. Got filled. So now GrubHub has a call option against it, so it's a cover call trade now. So all these premiums, this is what I consider income, because it's the capital that I put in GrubHub is generating me these premiums that I'm collecting, right? So even if I lose my shares at 70, which is what I want, I'm getting premiums every month from it. Sometimes high, sometimes low. The first month I did this trade, I collected $3 in premiums. And then the second time, here actually I don't remember, but we can go see. So yeah, so the first time I made this trade, I collected about $3. The second time I collected about $2 because I bought back for 27, closed for 27, sold for 227. And then the third time made $1.10, and now today 55 cents. So $300, $200, $110, and $55 is what I made from my investment in GrubHub. And as you can see, it keeps going down because the stock keeps going down. But hopefully it comes back up around 70 and I get my money back and I move on. I'm not going to buy it again. I think it was a bad decision. All right, IMGN, this was a terrible stock. I bought it because the premiums were ridiculously high. My initial strike was $5, but now I just want my money back because I've held this for like 4 months and it's not doing anything for me, but I'm down 56%. But initially I collected enough premiums to bring down my cost to about $5. So United States Steel got executed here. So if I go back to my margin, you can see now I've got my United States Steel position has covered calls against it now. So now I'm just waiting for SNC and Dell. Dell's at, I'm asking for 80. Looks like it's not going through yet for sure, because right now the bid is 65 and the ask is 75. So that's what I was worried about, is waiting. But what if the stock goes the other direction? Now I'm going to get less. Okay, well, I'll go back to it and I'm just going to take care of the TFSA first. All right, so IMGN, I want my money back. But before just selling my shares for a loss, let me see if I can collect some premiums on the way out. So my true cost on this is about a little bit under $5. That's my true cost on this. So I break even a little bit under 5. But of course, I don't want to just break even. I want to make profit. But if I just break even on this, I'll be happy, or even lose a little bit. I just want my money back. All right, so let's see what I can get. I've got 400 shares, so I'm going to sell 4 contracts. IMGN. November 15. So see, at a 5 strike, which is my cost. At a 5 strike, which is my cost, I don't get anything. No one's buying. 4 strike, nothing. $3 strike, I can get 5 cents. 5 times 4 is $20. But then I risk losing my shares at 3, while my cost is about 5. So I lose $2 per share. Or what I could do is go further out. What if I go to December? Absolutely nothing in December. What if I go to January? I can go to $4 with January. Okay, I think that's safer. Nothing at 5. Let's say I go to April. I can actually get something at April at $5. On April at $5, so about 10 cents maybe, $40. Yeah, it's dead money. The thing is, if I accept to lose, let's say I go for November 15 and I go for a 3, I can't even go for a 3 strike anymore. There's no bid anymore. See, a second ago there was bid. Now there isn't. All right, so forget November 15. December, there's nothing. January. April. Let's go back to November. No, yeah, there's nothing. Unless I go for $2, get 50 cents. But then for sure, there's a big chance that I lose my shares at $2. So yeah, that's kind of stupid. All right, so I think I'm gonna go with January. Unless I just accept to sell it, but I would have sold it at 3, and if I lose my shares at 3, well, at least I collected something. And I get my money back sooner, and I can use it towards something else. But then, if I use it towards something else, can I actually recover what I lost with this future trade? Probably not, because it's hard to find a trade where you can make 100% or 80%. So that's why selling it, I would only sell it if I see that there is another opportunity for me to get back to break even faster. So I'm going to stick to January, go with a 4 strike, and let's go with 15 cents. I've got 4 contracts. I hope it goes through, but it probably won't. Maybe 10 cents will go through. So 4 strike. Let's try. $60 minus $8 of commissions. So 4 strike, 4 contracts. January 2020. Send orders. Yeah, I see it's not moving. All right, let's go to Neo now. Beautiful Neo 1.5. I bought it at 5. I've got 400 shares. I'm gonna have to go with a $2 strike. No choice. Unless I go further out, but even then. So if I go, let's say November 15 first, let's see how much I can get. The best I can get is, the further out I can go is $2.50, and that would be 2 cents times 4, which is $8. So yeah, commissions would eat that up. So even $2, I'm only getting 4 or 5 cents. 5 times 4 is 20 minus commissions of 8. Yeah. Let's see if I go to December. $2, yeah, it's better here, of course. $2.50, I can get something in the middle maybe, but there isn't a lot of volume there. Let's go to January. What happens if we go to February? Can I get something on a 5 strike? No. Okay, let's go to May 2020. 450, even 450, I can't get anything. All right, so I'm gonna go to November, and I'm just gonna go with a $2 strike, and hope that Neo does not go above $2 by November 15, which I don't think it will. All right, let's sell at 6 cents. So that's $24 minus $8 of commissions, $2 strike, 4 contracts of Neo. Now, remember, my cost on Neo is $5, so this isn't even good. But I gotta get something out of my capital. I don't like to leave it just sitting there and waiting. So yeah, I don't think 6 cents is gonna get filled. I think I should go to 5 cents, but I'll leave it for a bit. I'll get back to it. So Neo, and then now I have Teva. Another bad covered call trade. It's bad because the stock dropped very hard since I bought it. So it's got earnings November 7th, so I should expect movement there. All right, so let's go November 15. Let's see if I can go, how far can I go? I can go to 950 and still collect something. I think Teva, I've got 500 shares. Yeah, 500 shares. So that's going to be 5 contracts. So I can go all the way out to November 5th. I can go all the way out to 950, collect 21 cents times 5. That's not bad, actually. Let's see if I go to December. Can go to 12. I think I'd rather stick with November 15 and go as far as I can. So with 950, $10, I get 14 cents. Not bad. But do I really think Teva's going to go from 7.7 to 10? What's 14 times 5? $70, yeah. I think I should take that. Yeah. I'm also thinking of going maybe at 9, get a higher premium. But this way, I'm sort of assuming that Teva won't go above 9 come November 15. It's got a delta of 20. This has got a delta of 12. It's hard to decide. It's tempting to go for the higher premium, especially knowing that Teva's been performing terribly So it's annoying if I go up for 10 and then Teva ends up below 8, then I missed out on these premiums here. I could have gone for a $9 premium. It would have been better off, but obviously I don't know what's going to happen. I think it's best to be safe, I guess. I think I'll go for 9.50. I'm hesitating between 9 and 10. I'll just go for 9.50, collecting about 5 cents more. 5 times 5 is $25 more. Even if Teva goes up and it has good earnings, it's going to go up, what, 20%? So what's 20% times 7.7? 9.24. Yeah, I'm going to go for 21. All right, so 5 contracts. Right now bid is 20, ask is 22, so let's go for 21. Sell, yes. $105, yes. Send order. Come on, it should get executed. It's right in the middle. So anything else here? Teva, Neo, IMGN, CHK, I still didn't do anything. I think because it has earnings, I believe. Is that why? Yeah. Okay, let's go to my RSP now. Bombardier. I've got 800 shares of Bombardier, so 8 contracts. My cost is 1.82, so I can either go for a 1.75 strike, but I'll be losing the difference of 7 cents, or I can go for a $2 strike. So let's see what I can get with Bombardier. 800 shares. So November 15, it's got earnings November 7th, okay. 1.75, I can get 7 cents. So basically I'd lose what I've made, because if it gets called away at 1.75, my cost is 1.82. So I lose the difference, so not worth it. $2, I get 2 cents. 2 times 8, 16 minus commissions. Yeah, not worth it. Okay, so can't get anything from Bombardier. That's not good. I'll have to go further out. Let's go December then. 1.75 gets me 11 at 1.75. $2 gets me about 4 or 5. Yeah, I have no choice. I'm gonna have to go for December. And I'll have to go for 6 cents. I've got how many? I've got 8 contracts. That's disappointing. Not getting much out of this one. So 8 times 6 cents. Yeah, 48 minus $11 of commissions, because I've got 8 contracts. Sell short December 20th, 2 call. Yeah, all right. Did it get filled? Nope. All right. I've got L brands. Damn it. Another bad one here. I bought it at 26.2. Stock's at 16.5. So which strike should I choose? I know some people say that it's best to wait until the stock goes up and then sell a call option, but I don't like waiting because I don't know if it's going to go up. It might continue to go lower. And I don't like leaving capital that's not doing anything for me. So for me, capital has to generate income, has to do something. So by selling call options, it's generating income. But yes, I am taking the risk of losing my shares at a lower strike. But it doesn't always happen, and I'll just deal with it in case it happens, either by buying back the call option and selling one a little bit higher. I'm paying for it, but it doesn't always happen. It's risky, but that risk has a smaller chance of happening. All right, so L brands, my cost is 26. See, last month I had a 21.5 strike and it didn't get close to it. So sometimes it's okay to sell at a lower strike if the stock is doing badly. All right, so November 15, the best I can get is about 1850 at an 1850 strike. Can get 15 cents. That's sad. It has earnings November 7th. Okay, so you should expect movement after November 7th. But obviously I don't know which direction this movement will be. So at $19 I get 10 cents. Not good. What if I go to December 20th? At $22.50 I can get maybe 10 cents. At $20 I can get 35 or 40 cents. $20, but this is all the way out till December 20th. What if I do weeklies? Let's see what I can get. October 25th, 1750, no, too close. November 8th, 19 strike. Yeah, right now it's either going to be, well, let's see November 22nd actually. can go all the way out to 20. Collect 20 cents. That's November 22nd. And what was wrong with November 15? Yeah, I could only do 19. So for an extra week, I get an extra $1 of breathing room. And if I do December, I can go to 20 as well. Okay, so forget December. Let's do November 29. I can go all the way out to 21, but an extra 2 weeks. 20, 50, 20. Okay, I think I'm going to do November 22nd. I'm going to do a 20 strike. Oh, this one just came in and disappeared. All right. Or maybe a 20.5. I'm going to do a 20 strike, selling at 20 cents. I've got 100 shares, so one contract. Sell. This one should get executed. I don't know what's wrong with it. It's right in the middle. All right, so now the other terrible cover call trade I've got here is Novavax. Look at this. 39 price. The stock is trading at 4.42, 88% down. But the premium that I collected initially on this trade brings down my cost to $21. So my true cost, my break-even cost is 21, plus any premiums I already collected. But my cost is about $21 here. But they had a stock split, so initially the stock was trading at 2, now it's trading at 39. So I think stock split was at 20 times. So instead of having 3,200 shares, now I only have 160 shares. So I can't even do 2 contracts. I can only do 1 contract unless I buy 40 shares at 4.46, and then I could sell 2 contracts. So right now, if I don't want to buy more of Novavax because I don't like it, I could only sell 1 contract, which means only 100 shares of my 160 shares is being used, correct? So if I do, let's see what it's trading at. So November 15, I can go all the way out to 6 strike, and that gives me about $10. Minus commission's not worth it. 550. I think I should buy 40 shares just to make it 2 contracts. 40 times 4.46, $178. I mean, I don't think Novavax can get any worse than that, right? It's not going to drop below 4.46. Although it was trading in like the pennies. Yeah, maybe I shouldn't put more into it. So I'll just have to sell 1 contract. Let's say I sell it at... Problem is, commissions is going to eat this up, $10. If I had 2 contracts, it'll be 20 minus 6. So yeah, at least I get $14. Here at 550, it's a bit close. I get $15 minus commissions, get $9. Maybe I can go for 5. Then I risk losing my shares at 5. Well, my cost is 15. That's a $1,500 loss. For now, I think I'll put it at 15 at a 6 strike. If it goes through, it goes through. If not, I'll adjust. So 15 cents, 6 strike, November 15. Quite sad. All right, so for my RSP, none of them went through. Maybe I can... I don't think I should move this one. I mean, I think 20 cents is fair. Maybe I'll have to move Bombardier, yeah. Let's go to 5. 5 times 8 is 40. Okay. 5 cents. Send order. Still didn't go through? What the hell? I'm being very fair. There isn't enough volume. Maybe I'll have to change the expiration. If I go back to Bombardier, go to November 15. So the monthlies usually have the most volume. If I go with $2 in November 15, I can only get like 2 cents. 2 times 8, 16, minus commissions. I'm not going to be left with much. So I really have to go to December. $2. Yeah, right now you see, this is my order here. The ask here, the 8th. I think it's fair. I'll just hold on to it. Let's go back to my TFSA. Teva didn't go through. Oh, now Teva dropped. Just perfect. What's my strike? 950? I'll have to drop it. I'll go to 19. Neo, I'll go to 5. Amgen, I'm going to leave. Afria. Yeah, I'll just hold on to these. SNC, come on. 15 and 20. 20 is not getting executed. Dell, what's going on with Dell? Oh, wow. 65 and 75. Okay, I'm going to cancel SNC. I'm going to change this strike on SNC. I'm gonna go with still November 15, 21. I can get 25 cents, or $20 I can get 35. Or what if I go to December? Or let's see what I can get November 22nd. No, there's nothing November 22nd. December 20th. If I go with 22. Yeah, I think I'll just go to December 20th. So 22 or 21 strike. Don't want to really hold it until December though. So the problem is the 20 cents, which is right in the middle, doesn't want to get executed. So if I go to 21 strike, I can get $25. Yeah, I don't think it's going to be above it. I don't think S&T is going to get above 21. Let's just go for 21 strike. I don't think 30 is not going to get it filled. I've got one contract and in my margin, yeah. All right, I'm going to change it to 25. Not the best. Dell, what's going on with Dell? We're back up again. All right, let's just bring it to 75. Let's just end this. End my misery. Oh, look, it's going up. It's going up. 49.93. Maybe I should stay with 80. Oh, 49.97. I have a feeling that after I sell this, I could have sold it afterwards for $1.20 or more. But whatever. Just take $75 and get out. There we go. All right, so now my Dell has a $75 option attached to it. Good. There you go. Look at this. I'm going to regret this, I'm sure. Like always. All right, so now all my positions in my margin account have covered calls if they are shares, if it is stock. In my TFSA though, still waiting on Afria, IMGN, Neo, and Teva. Here, let's look at Teva. I think 19 is going to get executed. I'll just wait. Neo, IMGN, and Afria. And I've got CHK as well. I think I want to wait for earnings for CHK. I think that's what I'll do because it could move hard. And earnings is November 1st. I'll go back to it. I'm not sure yet. All right, so let's just go to my margin account and look at my credit spreads. That's what I care about the most right now. All right, so I've got this DIA November 15. Still have time. It's showing a small profit. I could probably close it actually if I wanted to. Remove the risk off the table. Let's see how much I collected. 96 minus 49 plus 277 minus 233. I collected 91 cents. I could close it for 39. And now, is there a side that's being tested more than the other? The call side is pretty safe. The put side is also pretty safe. I think I'll hold on to it. IWM, although if I want to be mechanical, I should close it because it's showing me more than a 50% profit. But I'll hold on to it because it's really not tested. I don't see any trouble coming from it. IWM, this one's showing a good profit. Collected 48 cents. I could close it right now for 11 cents. But my put strike is 140, so it's safe. So Neo got filled at 5 cents. So this one's safe. I'm not going to do anything. MasterCard, this one I was thinking of closing last week. It expires this week, but as you can see, it's completely worthless. For this trade to be in trouble, MasterCard would have to go all the way up to 287. Now, a subscriber actually suggested that I bring the calls down to collect more premium. So let's see what happens if I do that. So I'll have to close these ones and then add new calls, right? October 25th, I've got 2 contracts. Now let's say I bring it down to 282.5, let's say. I'd sell the 282.5, and for protection, I'd buy the 285s. All right. So as you can see, it's not even 10 cents of premium. So it's not worth the added risk. The added risk being now instead of worrying about MasterCard going to 287, I have to worry about MasterCard going to 282. And for what? For an extra $10? It's not there. It's not worth it. What if I get closer? What if I get to 280 and 282.5 as protection? I collect about $15 in that case, or $30. So if I'm pretty confident that MasterCard doesn't go above 280 in this week, I could do that trade and get an extra $30. But for $30, not worth risking $470. So I'm going to leave it as is and hopefully let it expire worthless. I think from 270 to 287, it's safe. I mean, markets don't crash up, right? They can come down real fast, but they don't go up real fast. All right, Nvidia, this is the one I'm worried about that I should have closed last week. I had a chance of closing this last week for about under 60 cents. Look at this. It's already at $1.14. So this one right now is showing me a loss. I should have closed it last Friday, but I didn't. Now, my risk is 202.5. Look how far it is. It's not that far. And I still have until November 8th. And then I have this other Nvidia call spread at 210. Right now it's showing me a profit, but I'm going to keep it because if I'm keeping this one, I might as well keep this one. If I'm keeping the 202.5, I might as well trust the 210. But definitely the next chance I have of closing the 202.5, I will close it, even if it's for a small loss or break even. Because as you can see, I could have closed it last Friday for 60 cents. Right now it's at $1.27 already. Super dangerous. Vertical call on the Qs, this one's showing me trouble. About $60 loss right now. I've got this iron condor on the Qs, but it's November 29th, too early. I'm not going to look at it. Russell 2000 iron condor, November 15. It's showing me a loss. I'm not going to do anything yet. November 29, iron condor on another iron condor on the Russell 2000. November 29, still too early to do anything. I've got some call spreads on the SPX. Let's see what it's showing me right now. So the SPX is at 3000. This one's a 3085 strike, showing me a small loss right now, but it's still too early. November 15 as well. This one's showing me a small profit. This one should be a good profit, 31.25, November 15. But is it worth closing? No, because I don't think SPX will reach 31.25 by November 15. So it's got a good chance of expiring worthless. But if I wanted to, I could close it for about 20 cents. I collected 85 cents from this. So it's definitely more than 50% profit. I do have this iron condor on the SPX. This one on the call side is a bit dangerous, right? All right, Teva got filled at 19 cents. Okay, good. This one's a little bit in trouble on the call side, of course. The put side is showing a small profit. This, I guess I should keep an eye on. Won't do anything right now because I still have time. This one is also pretty close, 30.70. Now the SPY, I've got some vertical calls at 307. I could close it right now for about $6. That's if I'm worried about the SPY reaching 307 come October 30th. This I've got October 25th, the SPY reaching 308. So this one's pretty safe. You see, it's worthless. There's no point taking action on this one. But this one, it's also pretty safe, but is it worth holding on to until October 30th, which is 2 weeks away? Can the SPY reach 307 in 2 weeks? Probably not. I'm going to ignore it. SPY November 4th, 305. Yeah, this one's not good. I should definitely close this one. November 4th, 305 is possible. It's more time and the strike is closer. In fact, let's see if I can close this whole iron. I think this is the iron condor I wanted to close last week, but it didn't go through. Let's see what I can close it for today. I've got a put at 282. Kind of feel bad closing this put. I mean, let's see if I can combine it with another put. And I don't have any other puts on the SPY. I've got this one here at 281, but it's November 22nd. It's so early. Yeah, I might close this iron condor actually. So I collected, let's see how much I collected out of it. I don't remember. So 59 minus 13 plus 220 minus 149. Collected 117. I can close it for about $56. So that's half, right? Yeah, 58. Yeah, that's exactly half. So I'm gonna put an order at around 55, 53 maybe, and then the rest. This one's too early. November 22nd, November 20. I still have a lot of time. Now definitely, let's look at the VIX. I think the VIX is low today. I think it's at around 14. So when the VIX is low, premiums aren't that high. So it's not the best time to sell premiums. But I still want to sell something because that's my That's how I generate income from my capital. All right, so this was day 32. Went through my strategy. I'm most likely going to continue looking at this. I'm going to try to sell a put credit spread, I'm going to try to sell a call credit spread on something. I haven't decided yet. And then just try to adjust my open trades that aren't going through. If you have any questions, leave them in the comment section below. Like always, if you're going to open an account with Questrade to trade on the stock market, use my referral code in the description below the video to get up to $250 back. Thanks for watching.